When picking stocks, sometimes we want to avoid all the market noise and the daily fluctuations. Not to mention, currently we have interest rates on the rise, uncertainty ahead, and many economists, including Alan Greenspan, pointing to a likely recession this year. Many of these factors have caused investors to turn to bonds for a steady stream of income. I see a big problem. The bond yield curve is inverted. What that means is investors are rewarded less for loaning out their money longer. Remember, as a bond buyer, you are effectively loaning out your money to someone else. And in our current bond market, if you wanted to buy and hold a bond for more than 1 year, you're actually getting less interest payments. So what can we do to avoid current market and economic issues? By finding good companies with consistent and reliable dividend payments. This means that they generate enough money to keep paying dividends even though the economy is going through tough times. With the potential for capital appreciation and this reliable income stream, these make bonds a far inferior long-term investment. Today's list consists of big blue chip companies that have been around for ages and have a strong competitive edge. These companies have a history of paying sustainable dividends with room for growth. They've been around for decades and more importantly will continue to be around for decades to come. These stocks are like the trusty old pickup truck, dependable, and will always get the job done. Now without further ado, let's dive into the 7 dividend stocks that will stand the test of time. To keep updated, be sure to subscribe and hit that notification bell so you can be amongst the first to know when a new investment inspiration video is available. First on our list, and a stock that's been around since the 70s, COSTCO Wholesale Corp. Ticker symbol COST. This membership warehouse retailer, based in the small town of Issaquah, Washington, has come a long way from its humble beginnings. Now, it is a $200 billion company that is the cream of the crop in its industry. Costco's business model is simple, yet incredibly powerful. Charge a modest membership fee and then sell goods in bulk at near cost prices. And let me tell you, those membership fees add up quickly, with Costco raking in an astounding $4.3 billion in membership dues in the past 12 months through November of 2022. Now you might be thinking, what about the dividend? Sure, 0.7% dividend yield will not change your life, but the current payout of $3.60 per share has grown 9x since it was initiated at 40 cents in 2004. COSTCO Wholesale Corp is a stock that you can buy and hold forever. Its simple yet profitable business model of consistent membership income and growing dividend make it a solid pick in the consumer defensive sector. If you're looking for a dependable stock that's built to last, COSTCO is the way to go. Next on our list, Johnson & Johnson. Ticker symbol JNJ. Johnson & Johnson is the epitome of blue chip dividend stocks. With a diversified portfolio spanning across pharmaceuticals, medical devices, and consumer health, Johnson & Johnson is a one-stop shop for investors looking for stability and growth. But Johnson & Johnson is more than just a diversified company. It's a household name, from Benadryl to Listerine, Pepcid to Tylenol, Sudafed to Band-Aid. Johnson & Johnson's consumer brands have been trusted by consumers for decades. But the real growth driver for the company lies in its pharmaceutical segment, which not only makes up the largest division of Johnson & Johnson, but also the fastest growing. In the third quarter of 2022, the segment saw a 9% growth, driven by drugs like Darzalex for multiple myeloma, Tremfya for plaque psoriasis and arthritis, and Stelara for inflammatory diseases. And let's not forget about Johnson & Johnson's dividend history. As a member of the elite aristocrats club, Johnson & Johnson has grown its dividend annually for 6 decades and counting. With a current dividend yield of 2.6% and a market capitalization of $450 billion, Johnson & Johnson is a solid investment opportunity for the ever-growing healthcare sector. No dividend champions list would be complete without my favorite beverage, Coca-Cola, ticker symbol KO. Now, Coca-Cola has been around since 1886. It has one of the most recognized consumer brands in the world and a loyal customer base. It's hard to imagine a scenario where Coca-Cola isn't a dominant player in the global stock market. Warren Buffett, the legendary investor, is a big fan of Coca-Cola and holds it in his top portfolio of companies at Berkshire Hathaway. And it's no wonder why, with 60 years of consecutive dividend increases, few income stocks are as reliable as Coca-Cola. Now, you're probably wondering, what about growth? Sure, you don't get dynamic growth from Coca-Cola, but what you get is resilience. Even in a year where the S&P 500 plunged by 19.4%, Coca-Cola posted a total return of 10.6%. Coca-Cola is a stock you can buy and hold forever. It's a timeless brand with a loyal consumer base, a long history of paying and increasing its dividends, and a resilient track record even during tough times. With a market capitalization of $260 billion and a dividend yield of 2.8%, this stock is a great consumer defensive stock for you to add to your portfolio of investments. If you like these kinds of videos and want us to find different stocks for your investment portfolio, be sure to like this video and leave us a comment down below. Also, all the names on this list can be invested in for just $5 if you use Webull and their fractional share purchase program. So, with just $35, you can get all 7 companies in today's list and start earning dividend income right away. Our next name on the list is a solid investment opportunity in the technology sector, CISCO Systems Inc., ticker symbol CSCO. CISCO is a communication equipment company that provides much of the infrastructure that makes the modern internet and technological world hum. They have established themselves as a vital part of the world's information technology infrastructure. Even though Cisco is a tech stock, its history dates back only to 1984, but the company managed to quickly establish itself as a vital part of the world's IT infrastructure. Perhaps more impressively, they've stayed there. Cisco may not break any growth records these days, but analysts expect both top and bottom line growth to be between 5 and 6% this year. Although the tech sell-off of 2022 has hit Cisco really hard, now might be a chance to get into Cisco at reasonable levels. Shares currently go for less than 14 times earnings, and the company's conservative 54% payout ratio shows that profits could be nearly cut in half without putting that dividend at risk. Currently, Cisco has a dividend yield of 3.1% along with its market capitalization of $195 billion. Cisco is a solid investment opportunity in the technology sector, so don't miss out a chance to own a piece of a company that's proven its resilience, success, and growth potential throughout the years. Next on our list is a company that has a proven track record of success and growth in an industry with high barriers to entry. We have United Parcel Service Inc., ticker symbol UPS. Headquartered in Atlanta and founded in 1907, UPS is a dominant player in transportation, logistics, and package delivery on a global scale. Despite the increasing digitalization of the economy, the demand for physical goods is still going strong, and UPS is well positioned to capitalize on it. With a long-standing freight infrastructure and expertise, UPS is an established player in an industry dominated by a small number of large companies. Not to mention, this company has been growing steadily from $66 billion in revenue in 2017 to an expected $101 billion in sales in 2022. If analyst estimates are correct, its 2022 earnings per share of $12.92 will reflect roughly a 130% jump from the $5.61 of EPS it reported in 2017. The best part, UPS is trading at less than 15 times earnings and has a payout ratio of just 44%. This reflects plenty of room for future dividend increases, and of course its current dividend yield is 3.3%. UPS is a solid investment opportunity in the industrial sector, so don't miss out on a chance to own a piece of a company that has proven its resilience, success, and growth throughout the years. Next, we have a solid investment opportunity in the finance sector. PNC Financial Services Group Inc., ticker symbol PNC. While PNC might be the smallest company on this list, it's definitely not small by any measure of the imagination. PNC has a long, storied history. Having been formed in 1852 in Pittsburgh, the company has managed to survive and thrive through some of the toughest times in American history, including the Civil War, the Great Depression, and many other crashes and recessions. PNC has proven to be a resilient company that can weather any storm. In 2022, bank stocks have been beaten down as investors anticipate another recession. But PNC is in great shape if the economy managed to make a soft landing. And even if it doesn't, PNC looks like a value stock, trading for just 10 times forward earnings, despite analysts' expectations of a roughly 10% revenue and earnings growth in 2023. PNC currently has a dividend yield of 3.6%, and it's a solid investment for those looking for an opportunity in the finance sector. Last on our list, paying the highest dividend today, is AbbVie, ticker symbol ABBV. Now, AbbVie is a pharmaceutical giant that's a true blue chip stock. The company has a proven track record of paying and increasing its dividends for 50 consecutive years. That's rare for companies on the S&P 500, and it's also increased its dividend payout for at least 25 years, making it a member of the aristocrat. But here's the thing. Even though AbbVie's sales of its blockbuster drug Humira are set to decline due to patent expiration, it has a pipeline of new drugs that are already making waves in the market. They have immunization medication Skyrizi and Rinvoq, which saw year-over-year sales growth of 75% and 53% respectively in the Q3 of 2022. They currently pay out a dividend yield of 3.8%, and AbbVie is one of those stocks that you can buy and hold forever in the pharmaceutical and healthcare sector. AbbVie is a dividend stock that is built to last, and is definitely not a one-hit wonder. So now might be a great time to get a company with a proven track record of paying and increasing dividends, along with a strong pipeline of new drugs that would drive not only future growth, but sustained dividend income. So if you're looking for a dependable stock that will always be there for you, AbbVie might be the one to go with. I hope you enjoyed the list of the best 7 stocks to buy and hold forever. For more investment inspiration, see our dividend playlist, and be sure to like and subscribe if you haven't already, and we'll see you in the next video.